one of the fundamental concepts in our course is that there are gains from trade. And we have mostly been talking about the gains that we get when, say, we go to the grocery store and we pay for our groceries and we get more value from the food that we bring home than the grocery store gets from the money we leave behind. But we can also talk about gains from trade in terms of the international trade, and we can use our concepts of consumer and producer surplus to actually measure the gains from trade in the international markets. So, for example, let's talk about the market for soybeans. And let's assume that there's a supply and demand for soybeans in autarky. Autarky means a world without trade. And let's say that within the world without trade that we would be consuming and producing 60 billion tons of soybeans every year, and that the price would be $8. And if that were true, then we would know that the consumer surplus, let's also put some intercepts here on the graph. And so we can calculate the consumer surplus is 1/2 times the quantity times the intercept minus the price, which in this case would be 120. And then that's the consumer surplus. And the producer surplus would be 1/2 times the quantity times the price minus the intercept on the supply curve. And in this case, that would be 180. And so the total surplus in the economy would be $300. Now, let's assume that we're going to open our market up to international trade, and that the world price for soybeans is $10. So what we assume is that our consumers can now buy as many soybeans as they want at $10, and our producers can produce as many soybeans as they want and sell them at $10. Well, if the world price is above the price in autarky, consumers are going to want to demand fewer, because now that the price is $10, consumers are only going to want to demand 30. But with the price at $10, our producers are going to want to produce more. They're going to move more resources into soybean production, hire more workers, and maybe plant more acres of soybeans, and they're going to be producing the 80 million tons. We don't need to really worry about all the zeros. We'll just call it 80 at this point. So we've increased production. Consumers are buying less. And so the difference between what the producers are producing and what the consumers are buying, we're going to export that. So our exports are going to be the quantity supplied at the higher price minus the quantity demanded at the higher price. And so we're going to be exporting 50 soybeans. Consumers are going to consume 30. Total production domestically would be 80. Or another way to put it, we're going to produce 80, and of the 80, 30 is going to be consumed domestically, 50 is going to be exported. Why is this a benefit to our society? Consumers are clearly not happy about this higher price. Consumer surplus has shrunk down to this little triangle here, and so we can calculate the consumer surplus. 1/2 times the quantity that the consumers are now consuming, which is 30, times the price, the intercept minus the new price. And so this becomes a consumer surplus of only 15 times 2, which is 30. But our producers are really, really happy with this new situation, right? The producer surplus is this now much larger area than we had before the price increase. And so the producer surplus, and producers are now producing 80, right? So producer surplus is going to be 1/2 times the 80 times the new world price minus the intercept there. So this would be 40 times 8, which is 320. And so 320 plus 30 is 350, a 16% increase in total surplus from what we had before we opened our economy to export. And so while consumers are paying a higher price because the domestic price or in Autark had only been 8 and their consumer surplus has shrunk down, the overall wealth of the society has increased because of the fact that we have this comparative advantage in soybeans. We can produce them at a lower price than the world price. And so when we're exposed to the world price, will increase production. Prices do go up. Supply curves slope up. That's why consumers have to pay that higher price as well. But the overall wealth of the society is increased because of the exports of the soybeans.